The details on the pending tax bill sitting in Congress have been leaked, and this is huge. I'm gonna go over in today's video what's in and what's out. Now, if you are an individual or a small business owner, this matters to you, every freaking American paying tax. This is significant. This was the biggest tax reform package, the Tax Cuts and Jobs Act, 9 years ago. It's set to expire. What's in and what's out is a big deal. Higher rates are set to go up for everybody if nothing is extended. This is high income, low income. The standard deduction is gonna be cut in half if this is not extended. That is something lower income or middle income taxpayers use. High income earners itemize their deductions. They don't use the standard deduction. The child tax credit, the small business deduction of 20%, that's been the greatest benefit for small business owners in the tax code in my lifetime, is gonna go away. So this is huge. I'm gonna break it down, what's in and what's out. I'm Matt Sorensen. Let's build wealth. All right, I'm gonna break this down first for big business, small business, and then individuals. And I'm gonna go over some of the details of where everything is stuck right now and what they're fighting about that may not be in and may not be out depending on how final negotiations go. All right, let's start with corporate tax. The corporate tax rate, Tax Cuts and Jobs Act that was enacted back in 2017, tax rate went from 35% on large corporations, these are C Corps, down to a permanent rate of 21%. Now you might be asking, well, that was a permanent change, Matt. All this other stuff was temporary changes that's set to expire. Why are we talking about this? That's still on the table. Trump wants to reduce, and many Republicans in Congress, the corporate tax rate from 21% to 15% for US companies that are manufacturing in the US. So that could be a change we'll see in the corporate tax rate. Again, this is the top big companies that typically pay this rate. They are C corporations. All right, now there's a lot going on for small business owners. The biggest one being the 20% deduction that small business owners get, LLCs, sole proprietorships, S corporations. You get a 20% deduction on your business income. This is because of the Tax Cuts and Jobs Act went into effect in 2017. That expires this year, okay? Congress is debating whether to extend this or not. Trump and House Republicans have called for an extension specifically of this provision and most of the provisions in the Tax Cuts and Jobs Act. This bill, what it means, if you're a small business owner, you're making 200 grand a year, you get an automatic 20% deduction on your business. Now it looks like you only made $160,000 a year, and that's what you have to pay tax on. This is a significant deduction and benefit for small business owners. It was the biggest win in my mind for small business owners. Most of our clients in our law firm take this. I take this deduction every year. It is huge. It is saving a lot of taxes, it has helped create a lot of jobs, and was the one olive branch that small business got. Big corporations went from 35% down to 21%. Small business got this 20% deduction, so we need to make sure that that is extended. Now, the good news is that's in the bill. There's bipartisan support even for this provision. A lot of moderate Democrats are in favor of extending this as well, so that is going to be in. All right, next that affects small business was bonus depreciation. There was 100% bonus depreciation if you got a new vehicle or equipment in your business. This was back in 2017. You got 100% bonus depreciation deduction, which meant you got to expense it all up front rather than over time. Now that has been phasing down, and even right now you can only take a 40% bonus depreciation deduction on new equipment bought as a business owner. However, the new provision to be in the bill is to go back to 100% bonus depreciation starting in 2026, possibly even including 2025. We will see. All right, now let's get to individuals, and frankly, this is where stuff starts to get off the rails because there's a lot of debate and disagreement even amongst Republicans who have to be unanimous to pass this bill. And this is some of the issues. Now, here's what's definitely agreed upon and what people are in favor of: reducing the tax rates. Tax Cuts and Jobs Act reduced rates for 10 years. That is set to expire. This is the last year of reduced rates. Every bracket from high income to middle income to low income had their rate reduced. Everyone's paying less tax under the Tax Cuts and Jobs Act. So that is proposed to be extended. Not a lot of disagreement there. Most people are in favor. Even Trump himself has said he's willing to keep a higher rate for the highest of income tax brackets. We'll see. That might be a negotiating tip depending on where things go in this legislation. Now, the other thing that is huge for individuals is they doubled the standard deduction. The standard deduction is what you can take when you don't itemize. Frankly, it's something that a lot of lower middle income earners use. And what it says is I get an automatic deduction on my taxes. For example, if you made $100,000 a year, right now, what you can take is a $29,000 standard deduction if you're married, and your only tax is if you made $71,000. And what's going to happen is that doubling of the standard deduction is going to go away, and it's going to get cut in 2026 to only $16,000. So now if I made $100,000 a year, I'm only going to get a $16,000 standard deduction if I'm I'm married, filing joint. Now I'm taxed if I made $84,000 as opposed to the better amount of $71,000. So you can see that as a huge difference, and it reduces your taxable income, which means you pay less tax. All right, so that's doubling of the standard deduction. There's a lot of bipartisan support for that one, likely going to be in. That is in the provisions. So I would not expect that one to be dropped out. Next one, estate and gift tax exemption. This is another big one, but this one has some problems. Here's why. The estate and gift tax exemption used to be $5 million. If you had an estate $5 million or greater, you had to pay estate tax. If your estate was under $5 million, no estate tax. Now, what happened when this was first enacted back in 2017 is they say, we're going to increase that exemption. And right now it's at $14 million individual. If you're married, you're at $28 million, almost $30 million of a deduction on your estate when you pass away. That means your family gets to inherit that wealth without paying any taxes. Now, the estate tax at the federal level is almost 50%, so it's a pretty hefty tax. So for many people that have family businesses, the family farm, people that have saved and built wealth, they see this as a huge benefit to be able to keep that wealth, pass it on to their family and the next generation. But if it goes back down to $5 million, that is a pretty significant tax burden on those families. Now, this is where you get different political views. A lot of Democrats think that's the wealthy people. Who cares about them? Let's tax that estate. The government's entitled to it. A lot of Republicans take a contrary point of view and say, what did they do to build that? Let that go down to their families. They built that wealth. They already had to be taxed on it to make it. They've already been taxed on it for the property taxes and stuff as they've held it. Let them keep it within their family. Not meant to be political here, but I'm just saying that is one that is politically charged. We will see how that goes at the end of the day, because remember, Republicans have a very, very thin majority in the House and the Senate. They've got to get all of the moderates. They can't get any defactors on any of these provisions, and this is one we could see come off the table and possibly not extended. Now, there's two new ones that are going to be in the bill that Trump talked about in his campaign. The first, if you remember, was no tax on Social Security. We're expecting to see that in the final bill that's going to come out of Congress. Again, we're hoping to see this before Memorial Day. The other one that has had a lot of nuance and debate on is overtime pay. Trump on the campaign trail, and many Republicans that ran as well, said we are not going to tax overtime pay. Now, the provision that has been proposed so far is to say you get a $10,000 deduction on your overtime pay. So if you had overtime pay that you had to pay tax on, you get a $10,000 deduction on that income. So for example, let's say that you made $90,000 this year and $15,000 of that was overtime pay. Well, you get a deduction of $10,000, so that takes away $10,000 of the $15,000 of overtime, but you'd still have to pay tax on the $5,000 of overtime pay. So that's the provision right now that seems to be proposed. We'll see what ends up in the final bill is a deduction on $10,000. There's also a high income phase out on this as well. So if you're a high income earner, you won't get a deduction on this. I don't know that that matters. Most high income earners are either self-employed or on salary. They're not in an hourly job where they typically have overtime pay. So not likely to see that to be an issue. But again, remember, this is going to be a max $10,000 deduction. That is what is planned. Still negotiating. We'll see what comes out in the final bill. All right, now here's where all the problems are. The state and local income tax deduction. This is where you're hearing a lot of whispering coming out of Congress, people pointing fingers and saying this is what's jacking up the bill right now. What is the state and local income tax deduction? Well, one of the problems that they had in passing the bill 9 years ago was they said we need to raise some revenue in some areas. So there was some things that they did to raise revenue. What they did was a state and local income tax deduction cap. And they said, hey, if you pay more than $10,000 in state and local income tax, you do not get to take a deduction for that. We only let you take a deduction on your federal tax return for up to $10,000 of state and local tax. So let's say you're in a high state income tax state like California or New York, and let's say you paid $30,000 in state and local tax. They're like, you only get a deduction for $10,000. Now, there used to never be a cap, okay? If you had $100,000 in state and local tax, you could take a whole $100,000 deduction on that. And the concept is how am I supposed to pay federal income tax on money that I made that I had to pay to the state for state and local tax? I'm being taxed on the money that I already was taxed on. It's like a double tax, which is a fair argument. Well, they had to pay for the bill, so that was one of the things that they put into this bill. Now, the question is, are we going to let that cap expire? A lot of people are like, oh yeah, we're going to let that cap expire. Because if you're a Republican, let's say, in California or New York, you're a House member and you've got narrow margins in the House, your constituents lose on this. They can only take a $10,000 deduction on their state and local tax against their federal income. They do not want that. And so what you're seeing is bands of Republicans in states that have high state income, California, New Jersey, New York, banding together to say, we are going to hold out on this entire bill if we do not get that cap cap removed. Now, a lot of other Republicans, let's say you're in Texas or you're in Florida, they don't have a state tax. They don't really care as much. They have some local taxes and property taxes, but it's not as big of an issue for their constituents, so they're willing to let this cap stay. They're willing to keep a $10,000 cap, or maybe it could be 20 or 30. This may be negotiated and just a higher cap. My bet is that's where we go on this. I don't think 10,000 will be the cap. I don't think it goes off entirely, but I think it will be increased as some type of negotiating tip, because this is holding up the entire bill. This is screwing up everything else for big business, small business, the individual rates, child tax credit, standard deduction. Is this state and local income tax debate and Republicans fighting amongst themselves, from Republicans that are in high income tax states and those that are in no income tax states. Stay tuned. Make sure you're subscribed to my channel. I'll be giving you updates as the bill is released, what the House does, what the Senate does, the negotiations. This is huge. This was the biggest piece of tax legislation in my lifetime that happened back in 2016, put into effect in 2017. We are going to see this expire in 6 months. All these tax provisions are set to expire. If Congress can't get their crap together, it is going to be chaos, increased rates, reduced deductions, no more credits. This is affecting everyone. This is not a rich person bill. This is individuals getting child tax credits doubled, individuals getting lower individual tax rates, individuals getting a double standard deduction. Everyone was winning in this bill. So make sure you're subscribed. Also, I've got so many videos on helping you build wealth, save on taxes, and protecting your assets. I'm Matt Sorensen. We'll see you next time.